Electric continues to be the talk of the town after doubling investor wealth in 7 days. The stock did see a fall today as run-up anxiety has hit investors. The stock is currently down by about 7%. Now, Zomato, if you remember, had a very similar story. In fact, both the stocks had an identical issue price. So let's get in, Puneet and Mahima, to understand what's similar and what's different between both counters.
Well, thanks for that. We're comparing these two new age companies and looking at similar factors across both these verticals. Let's start with Ola Electric first. It is, of course, the new age IPO that came in last week. Issued price was roughly around 76 rupees. And for the first couple of hours, it did, moderate around the same price. But post then, we saw a 20% upper circuit for the company hit on the first day itself. Post that, it has seen a couple of more sessions where it hit that target and is up now 92% from the issue price in just 7 trading sessions. And I believe we've seen a similar trend of what played out over 7 days, but something similar in Zomato as well.
Absolutely. So Zomato also had an issue price of 76. However, it did list at a premium of 65% and it went till 154 rupees till November 21. However, post that there was a downfall after the anchor investors exited, where the stock fell till 46.8% on 29th of July. But since then, the stock has recovered and right now the stock is roughly trading at 290 a piece.
Well, when you move on and look at the financials of EBITDA positivity, among others factors like, that might be for Ola Electric as well, that in the next couple of weeks, we might see the first set of 18 crore shares coming out of the anchor book. But when you look at the EBITDA positivity, that's been one of the most promising things from Ola Electric. They reported the first quarter numbers on the 14th of August, and they've segregated the automotive as well as the cell manufacturing business. The automotive business has shown just negative EBITDA margins of 2%. Which has been quite positive because it's just the first quarter as a listed company, and they are promising a better future versus roughly around 10 quarters that something like a Zomato took for reporting that first EBITDA positivity as well.
Absolutely. So as you rightly mentioned, Zomato also took roughly 10 quarters to achieve EBITDA profitability, and it's been profitable since the past 4 quarters. Now, just to give a brief as to how the quarter is performed in terms of Q1 FY25, where food delivery business grew around 12%, the quick commerce grew around 22%, dining out vertical for the first time has swung into profitability, and Hyperpure also grew around 21.5%. So like you rightly mentioned, it's quite similar to Ola in terms of profitability as well, Puneet.
But when you look at the third factor that we're comparing for both these companies is, of course, what it's doing in the future as well. Now, it's already established that it's investing in a cell manufacturing for these batteries which are used in electric vehicles. That's a key positive for the company because currently around 35% of the vehicle cost of a scooter is roughly coming from these batteries itself, and localizing and making these itself will reduce the cost as well as better for its operating margins going forward as well. And we've seen something similar, a similar strategy to happen with Zomato as well.
Absolutely. So for Zomato, the turnaround came when it acquired Grofers, which is now known as Blinkit. It changed the face of Zomato completely. It acquired Blinkit roughly in 2022 at $568 million, which was a one-shot thing. And since then, Zomato's overall revenue and profitability has been seen improving. And even if we see the Q1 FY25 con call, the management has said that they plan to increase their dark stores to roughly 2,000 by the end of FY26, calendar year 26, and they're expecting a 20% plus growth in the food delivery itself in this particular financial year.
I mean, acquired for $568 million, it's now valued at $13 billion. But the next thing is what's next. This is what has happened for both these companies. Specifically for Ola Electric, they've launched the EV bike, which is a new as well as a niche segment for the country. They are expecting to be a category creator, which is a very new segment because just 10,000 EV bikes sold last year versus 9.5 lakh EV scooters sold. So that's one of the other things to look at. How will it perform in this particular new venture as well?
Absolutely. And the new venture that Zomato is venturing into is the ticketing business. They are in talks with Paytm, where they are planning to acquire the Paytm Insider, which is the ticketing business. This will be a new venture for Zomato, which can probably change the face of Zomato once again, like Blinkit did. And also, they have recently announced a new app called District, which will take care of their dine-outs as well as events like Zomato Land. So these are the two new ventures that Zomato is planning to foray into.
Finally, just to curtail this particular discussion is of course the valuations. Valuations are not cheap for something like an Ola Electric. It listed at 5 times EV to sales. It's now gone to 12 times EV to sales. And what's important is like how the customer reacts to this, how the investors also react to this, because from this around 12 times EV to sales range is where Zomato had first had that big fall post, anchor books and everything as well. So that will be one key thing to watch out for Ola Electric going forward. How are the investors reacting to these astronomically high valuations going forward as well?
Absolutely. So when Zomato was listed, since it was not profitable, it was valued at EV to sales, which was roughly at 15 times, which is still higher than that of Ola Electric. However, now since it's turned profitable, now analysts are calculating its valuation on PE basis. Currently, its trailing PE is at 640 times, which is quite higher. But if we go ahead and check the Bloomberg estimates, FY26 PE stands at around 90 times, which is again still expensive. So both these new age technology, new age apps to conclude businesses are still very high in valuations.